You all are learning to make financial statements, that is trading P&L and balance sheet account. But let's also know that who will be the users of these financial statements. So we can bifurcate them into two. There will be internal users and external users of these financial statements. Who are internal users? The most important internal user is the owner of the business. Owners should know about the safety of their capital. Safety of capital in which the business has been invested. They have invested in the business, so they are very concerned about their capital. So capital is safe or not, owner needs to know it through financial statements. So first is the owner, second is the management. Management needs to make some informed decisions. For their informed decisions, management needs to know about the business. For example, they need to invest in some new project. So by looking at the financial statements, they will know the position of the business and they can decide whether to invest or not. Now the third, the employees or workers. In larger organizations, we have provident fund, employee state insurance, etc. So, as an employee, they would like to know in the organization they are working, what is the profit of that organization, what is the financial position of the interested, so position of that organization. So definitely employees and workers are also interested in the internal information of the financial statements. Okay. External users. Who are external users? Government. Government needs to collect tax from the organization like sales tax, excise duty, VAT, service tax. So looking to the financial statements, the government can also cross tally how much tax it needs to actually collect. Then the public. It helps the public in the decision making. See, if somebody wants to have employment or any financial position leading to investment in a company, then it is all public who need to know about the financial position of the business. Okay. Now the banks and the financial institutions. You go to bank for a loan. First thing they will ask you is the financial statement, the balance sheet. Because they are giving you loan, they need to know the financial position of your business. Okay. So that will act as some additional information they need to know other than the financial information, and then only they'll decide whether to deal or not to deal. Okay. And what more? Creditors. I have purchased from them and I have still not yet paid them. So creditors are our suppliers and their investment is somehow in our business. So to check the credit worthiness of the business, creditors are also an user of our financial statement. For researches, for any researches or surveys on a particular firm or an industry need to have a group of financial statements or a group of companies, so that on comparison they come to a conclusion that how a particular industry is doing, how a particular electronic industry is doing. So they will take financial statements of a particular electronic industry and then they will come to a result. Then for product pricing, what should be the correct pricing of the product? See, sometimes what happens that after putting all my expenses into the trading and P&L account, I arrive to a figure which I can prove is right according to me, and I am placing the price on that product, and government may say not this price, you have to sell at that price only. Then you can prove that the product pricing what I am doing is correct because of the support of the financial statements only. You can prove it to the outsiders, and for you also, for your own product pricing also, you need some financial statements, and that only shows at what price your product should be marked. So a small use of internal use by the internal and external persons. I have told you that who are the users of financial statements and why such financial statements should be made. They are useful for the organization and as well as for the public at large.